Hi everyone. So the company we'll be analyzing today is GNFC, Gujarat Narmada Valley Fertilizers and Chemicals Limited. So what does this company do? This company is into fertilizers, chemicals and IT, although IT being a very small part. So, but the main profits for this company is from chemicals. So we'll focus on the chemicals part of this company. So the different chemicals this company makes: methanol, acetic acid, TDI, aniline, concentrated and weak nitric acid, formic acid, ammonium nitrate, and few other chemicals. Okay, so it has a monopoly in TDI. It is the only manufacturer of TDI in India. It has almost 70 odd percent market share. Okay, so what are these particular chemicals used for? So this methanol is used in chemicals and resins. Formic acid is used mainly in rubber, textiles, tanneries, and pharmaceutical industries. So both of them are for exports as well. And TDI, that goes into making of mattresses, foam, so all your car seats and all those, even sofas in your house, right? So all that foam is made from TDI. Okay, so if you look at the fundamentals of this particular company, so this company has a market cap of almost 5,700 crores, a small cap company. P value very reasonable. If you look at other chemical companies, no, what is happening is most of these fertilizer companies have a very solid chemical portfolio as well, but most of them are now being rated at their fertilizer P. So as and when the market is going to recognize that this particular company is more into chemicals, there would be some re-rating happening in these stocks. So ROC very good. So enterprise value is just 4,300 because this particular company has no debt and is sitting on a cash equivalent of almost 1,500 crores. Okay. So cash rich company. So basically, if you want to buy this, you're just paying around 4,300 crores to buy the whole company of GNFC. And if we look at the last quarter results, right? So that was very impressive. So 1,700 crores of sales, and the operating profit has increased to 27%. So what is happening in these chemical names is a lot of the business is being shifted to India from China. Okay, and because of that the pricing of all these chemicals has increased, and also because of anti-dumping duty on all these major chemicals, no, the prices of these chemicals are sustaining at these levels. So going forward also, this particular operating profit margin should be maintained in this particular company. Okay, so for the whole of 2021, the company made a sales of almost 5,000 crores and a net profit of almost 700 odd crores. Okay, so the ROC is also pretty impressive at 15%. Okay, 16% that is. Cash flow very solid, and the company has, what it has done is it has become debt free. Okay, from 860 crores which it had in March of 2020, now the company is debt free and sitting on a cash equivalent of 1,500 crores, which the company plans to utilize in this coming few months, a few quarters. The company is going to expand its formic acid and nitric acid plants for another 500 odd crores, and in the coming years they want to increase their capacities in all of these major chemicals with an investment of almost 1,500 crores. So all of that would be done through these internal accruals, as this company is generating huge cash flows. So basically, if you look at this, right, if you extrapolate this particular result of March and 300 odd crores, right, the total profits would be in the vicinity of 1,000 odd crores, right? So 1,000 odd crores, you are just paying something like 4,000 crores for this company, hardly four times of what cash this particular company is making, right? And now looking at the technicals of it, so this particular company, this particular chart, it has a resistance around 420 which it hit when it announced a spectacular results, right? That time it hit 422, and right now it is actually very near its support of 365, right? So and there has been pretty decent accumulation. actually very good accumulation happening in this stock after the result, right? There has been very good accumulation. So the big guys are entering this particular company now. And I feel in the coming just before the next quarter results or after the next quarter results, it should start moving up, right? So its all-time high is something like 550. If that is taken out, then we will definitely move to something like 650 or 700 levels. So at current levels, right, this company can, I feel, easily double to something like 700 odd rupees in the next 1.5 years, looking at how cheap the valuation of this particular company is. Okay. And one more thing I wanted to highlight. So if you look at the results of this particular company now, so the sector wise, if you look at it, the fertilizer business is 500 crores, whereas the chemical part of it is around 1250, right? For March quarter, this is, but the bulk of the profits, okay? So chemical fertilizer, it is not really, it is just breaking even, you can say, but the chemical business is really making huge profits. So if this is going to continue, and I feel it is going to continue, because the price of all these chemicals the company makes is going to sustain at these levels. Okay, so all of their chemical plants are running at 100 plus capacity. Only aniline was not running at 100% capacity, but even there, the government has imposed anti-dumping duty. So even that capacity utilization should improve in the coming days. Okay, so if you feel that this particular chemical company is undervalued and there is value here, then you can jump in and buy this stock. I personally feel it is like a heads you win, tails you don't lose much kind of a trade, where you are buying a company which trades less than its sales, whatever sales it is doing, right? And also a debt free company having cash of 1500 crores. Okay, thank you.